state rent, and also you're gonna have the drawings. So all your drawings, if you withdraw money, that's decreasing your equity. That means you're gonna debit this account, whatever account it could be. Maybe if a owner withdraw whatever amount from the account of the business that's drawing, right? And then you're gonna debit it. And then for liabilities, you're gonna have non-current liabilities and current liabilities. And your non-current liabilities are the liabilities that you will have to pay them after a period of 12 months. That will be your mortgage loan, your mortgage bond, and your current liabilities. That is going to be your creditors, bank overdraft. Let's say you withdraw money that is over your balance. That's going to be your current liability. And also your short-term part of loan. If you have to pay a part of loan within 12 months, that's going to be your current liability. And then you're going to have accrued expenses. That is expenses that are yet to be paid but belongs to the current financial year. And also you're going to have income that you received in advance. Okay, let me change this. And also you're gonna have income and expenses. Your incomes is the money you receive from the operation of your business, and your expenses are the expenditure. And then for expenses, you're gonna have cost of sales. You're gonna have interest expense. You're gonna have stationery. You're gonna have bad debts. So basically, under this account is everything that decreasing the money of the business. Okay, so it's gonna be all this and many more. Anyone who'd like to give us few?
Rent income.
No, it's gonna be expense now because it's expense.
Okay.
Yes, rent income is an income, not an expense. It's the money you receive from renting a building.
Electricity and water.
Yes, electricity and water, right?
Depreciation on vehicles and land.
Yes, depreciation here, right? Depreciation. Anyone else would like to give us the last two?
Vehicles.
No, vehicles is asset.
Okay.
Yes.
Advertising.
Depreciation on vehicle, that's gonna be the expense, not the vehicle, but the depreciation of the vehicle is gonna be the thing. Josh, did you say something?
Advertising.
Yes, advertising. What? Okay, cool. So now we're gonna go to the incomes. Incomes, as I said, is the money that you receive or any form of activity in the business.
Income.
Yes, a rent income. Rent
received.
Yes, that's rent income.
Okay.
Yeah.
Is another
Sales, you also have sales this side. Remember, somebody said sales is asset, sales is income, and you're gonna have discount received, discount received. You also gonna
Trading
have
stock deficit.
I can't hear that.
Trading stock deficit.
Yes, trading stock deficit, trading stock deficit, yes, and we're gonna have no, you the here it's surplus. The deficit deficit is the expense, guys. Deficit is the side, okay? And then this side is surplus. Surplus.
Interest received.
Yes, interest received. You are correct. Interest received. Also, bad
Dividend.
debts recovered. Bad debts recovered. Dividends, yes. Guys, don't mind my handwriting. That's it for from you guys. Okay, fine. I didn't tell you
Equipment.
that. What? Equipment. Equipment is asset.
Okay.
Yes. So I didn't tell you guys that expenses increase on the debit side. And your income, oh shit. Sorry. Your expenses increase on the debit side. Debit increase. That means your income increase on the credit side, okay? So I want you guys to, I'm gonna give you a transaction, right? So I want one of you to try it out. Okay, let me wipe this. So you got the rules, right? That the asset increase on the asset increasing on the debit side, and your equity and liability increasing both on the credit side. You got that, right? And your income are crediting, and then your expenses are debiting, right? Did you get that?
Yes.
Thank you. So I'm gonna give you a transaction just so I can check if you are cool with everything. Let's say ABC traders received 1,500 from one of its tenants for March 2021. Can you tell me, that when you have a transaction, for each and every debit you must have a credit, right? So can you tell me which two accounts are involved in this transaction above here?
Come again, ma'am.
Can you see this? ABC trader received 1,500 from one of its tenant for March 2021. So who can tell me which two accounts are involved here in this?
It's a asset.
Who's talking now?
It's not assets, ma'am.
Who's talking now?
Not real.
Okay, you say it's asset,
Yes. And creditors
and what?
and liabilities.
And liabilities.
Yes.
Why are you saying that?
Because it has an interest received.
It was what?
It has trade that received.
No, this is a company.
Okay.
It's a company. This one is the name of the company.
Company. Okay.
Yes. Okay, let me replace this traders with company just so you don't get confused. ABC company. So what do you say now?
Because I don't know, ma'am. Let me.
Jesh, what do you say over there?
Ma'am, I say that
I think
it's assets and liabilities.
Why assets and liabilities?
Because the asset, since the money is being received from the tenant, which will go into the bank, and the liability will be our current liability being received.
Our current liability. Okay, who's next? Dikeledi. Dikeledi, can you please unmute?
Madam.
What do you think about this transaction?
It's assets and liabilities.
Assets and liabilities. Which grade are you in?
Grade 12.
Grade 12. And Jesh, which grade are you in?
Grade 10.
Okay, grade 10. Fine. So guys, I'm not really disappointed because this is our very first class. So you were right when you're saying it's asset because it's bank, okay? And another account that is involved here, it's rent income. We talked about rent income, guys. It's rent income. And you sure you receiving money for renting out, right?
Yes.
So it's rent income. So you got money. Remember, this is an asset increase on the debit side. So let's say it's bank over here. You know that increase on the debit, decrease on the credit side. So where do I write the 1.5 here for this account, for the bank account?
Ma'am, on the debit side.
Debit side of the bank or rent income?
The rent income.
The debit of the rent income. Okay, you're gonna write it on the debit side of the bank because now you are receiving money from this tenant. When you receive money, that means you are getting money in. So it's gonna be on the side where it's increasing. Okay, because it's increasing our bank balance. So it's gonna be on your debit side. That means for the other account, it's gonna be on your credit side. You're gonna have from the bank, and you're gonna have rent income over here. Rent income. So guys, for you to cram this thing simply, you can, okay, all right, sorry. You can cram this by always making your bank the main account for each and every transaction. So if, for instance, if you check whether the statement is stating that you are getting money, or you are oh, sorry guys, that's load shedding. Can you see properly?
Yes, ma'am.
Can you? Okay, cool. So for each and every account, if you can, excuse me, this thing, if you can link each and every account to bank, you check whether the statement is stating the transaction is increasing the bank balance or decreasing the bank balance. Let's say they say a customer bought on credit, a customer bought on credit, bought on credit, on credit. So here you're gonna have that customer's name, the customer's name, customer R, let's say R, and then you link it to bank, ne? But the transaction that are linked to this statement over here does not involve bank, but you include it just for you to be safe. So you're gonna have to know which is increasing your bank. So here, if a customer is buying on a credit, that means if that person was buying on cash, the money was gonna be getting in. So that means that other customers control account is gonna be debited, because you would have got money, but instead you didn't get it yet. So you're gonna know that you're gonna have to debit it. Customer control. So that means if you debit this one, you're gonna credit this one, the customer that is buying on the credit. So let's look out for another example of a transaction. Let's give another example. Paid rent to let's say ABC company, again ABC company, for the year 2020, which was let's say 200,000 for the year. So how are you gonna record this one, guys? Okay, firstly, you can tell me which two accounts are involved here.
And liability.
One person at a time. Luyolo,
Name.
go for it. You say which two accounts are involved in this situation?
It's not for a bank.
Bank, yeah, and bank.
Equator.
What?
Liabilities.
Liabilities, no. Liswa, what's the other account involved here?
I'm not sure, ma'am. I was going to say liabilities too.
Okay.
Or is it
Okay.
rent?
Rent income.
No, it's rent expense because now you are paying for rent. That means it's rent expense. Income is when you receive money for renting out, and then rent expense is when you pay for being able to rent the property. So you're gonna have rent expenses. Remember, they increase on the debit and then increase here and then increase here and then increase on the debit, on the credit side. Okay. So for this one, because now you are paying, that means money is coming out of the business. Okay. So I believe that all of you can tell me what we're gonna do over here. Where we're gonna put the 200,000?
We're gonna put it in the bank.
Yes, which side?
Or they will decrease. It will decrease.
Okay, it's gonna be on the debit side. On the credit side, that means if it's on the credit side of the bank, it's gonna be on the debit side of the corresponding account.
Okay.
Guys, you must know that for each and every debit there must be a credit. Okay.
Okay, ma'am.
Yes. Okay, since this is our first class, because I'm not really comfortable, this is my first time conducting an online class. I normally do my classes physically, so I would like us to end here, but I want you to tell me the accounting rules that you got for today. And then tomorrow maybe we can start doing income statement and the rest. Have you written accounting already? The June exam?
Yes, ma'am.
No.
Ma'am.
Who wrote? Luyolo wrote, Shrias wrote, Lisa, did you write?
No,
You
no,
didn't
it's
write.
not
No, I didn't write it.
You didn't write.
Yes.
When are you writing?
Tomorrow.
Oh, are you okay with everything?
Not really.
What's the problem?
I'm not sure about completing the statement of comprehensive income.
Mm-hmm. What's troubling you there?
The steps, I am not familiar with the basics and everything. Just don't know what to do or start.
Okay, it's fine. I'll teach you as time goes on. But now, if you can grab those rules that we did today in the first thing, you should be good to go. If you can know which side increase, which account increase on which side, then you'll be good. So I want us to look back at what we did for asset, for owner's equity, for liabilities. Remember, asset equals to equity plus liabilities, owner's equity plus liabilities. And then we also did incomes and we also did expenses. We also did expenses. So we said that asset increase on the debit side, okay?
Yes.
So that means every account that's related to assets, if they're talking about increasing, then it's going to be debited. If maybe it's decreasing, for instance, we did 2 example about the rent that was paid and the rent that was received. If you receive money, that's going to be debited. If you pay, the money goes out from the account of the business, then you're going to credit it. That means it's plus minus over here. And then for owner's equity, you should know that it's vice versa. It's credit and debit. That means credit increase on the credit and decrease on the debit. Also for liabilities. For liabilities, you're gonna debit here on the credit, and it's gonna increase on the credit and increase on the debit. So for you to memorize it quickly, if you know this, we all know this, right? The equity equals to liability, the asset equals to equity plus liabilities. We all know this, right? This accounting equation. Anyone who doesn't know it? So I assume we all know it, ne? So for you guys to memorize this thing, you can do this. And you sure it's asset equals to equity, owner's equity plus liabilities. So you can memorize it by saying DR equals to CR plus CR. Then if you know it like this, then you will know that increases on the debit side, you should know that what's supposed to be here, it's asset, and then here it's equity plus liability, I'm sorry. So if you can get this one, I'm sure you'll be good to go, because it will be easy for you to remember it. If you say DR equals to CR plus CR, that means debit equals to credit plus credit. That means you've put the accounts that are crediting. So it's going to be asset equals to equity plus liability. Debit equals to credit plus credit. Do you guys get it?
Yes, ma'am.
Okay, cool. And for incomes increases incomes increases on the credit side and decrease on the debit side, and for expenses increases on the credit and decrease on the debit. Yes, because incomes are the vice income is the vice versa of expenses. Expenses is the vice versa of incomes. So if you're receiving money for renting out, that means you're gonna put it here, you're gonna put it here. And then if you pay, that's when you're gonna put it here, you're gonna put it here. And then for instance, sometimes you'd find that you've overpaid what you're supposed to pay. So that means the other amount, it's gonna be here. The amount that's not belonging to this year, it's gonna be it's gonna be credited to decrease this account so that it can match the financial year. Okay. I think we are done for today because I was just here for accounting rules, and this is the only rules we have in accounting, the major rules. If you can know these rules, you will be good to go for exams. You can get distinctions. Can we do income statement tomorrow?
Yes, ma'am. What time?
Yes, ma'am.
Details will be posted on the Telegram.
Okay, ma'am.
Yes. Okay, cool. We will do it tomorrow. What time are you normally free, guys? After school, are you available from 5? Are you available after 5? Are you available or also in the afternoon or what?
Now I'm available every time by 1 o'clock.
Okay. Can we do it 5 tomorrow or 5:30?
No problem.
5:30.
5:30. Lisa, what time?
I was not going to be available at 5. I'm only available 8 upwards.
Okay, the lesson will be recorded. Likeledi,
Also be available from 7, yeah.
you'll also be what?
Available from 7:30.
7:30. Okay, I will see what time we do it, but it will be posted prior before the class, right? So I hope you guys can memorize this thing. Please, you must dream about this DR equals to CR plus CR. Also, you should know this income and expenses for income statement, okay?
Okay, ma'am.
Yeah, so tomorrow we're going to look at accounts involving incomes and accounts involving expenses before we're going to do the income statement.
Okay, ma'am.
Okay, guys, have a good night.
Same to you, ma'am. Good night.
Thank you. Bye.
Thank you, ma'am.
Bye.
Bye.